Fidelity made an analysis on Ethereum, and they haven't done this before. They have only done this for Bitcoin. So what does this mean?
Yeah, so Fidelity is one of the largest asset managers in the world, and they're actually going to allow Ethereum to become available through their platform. They're going to offer custody and trading services, and they're also hiring more than 200 people to build out the infrastructure that they need to provide safe exposure to the Ethereum network. I mean, for me, this is pretty interesting because about a month ago, they offered a 20% allocation of their retirement plans to Bitcoin, and now they're taking it a step further, and they are making an official opinion about Ethereum. I think I've recommended on this channel before for people to read the Bitcoin investment thesis that Fidelity put out. They put out a similar PDF, I guess like explainer about Ethereum. This, for me, gives real legitimacy to the Ethereum blockchain. You see that there are two cryptocurrencies that have gotten regulatory clarity in terms of not being a security, which are Ethereum and Bitcoin. And now you're seeing asset managers like Fidelity offer it onto their platform. So definitely means that they are long-term seeing Ethereum as a viable asset to provide.
So for those who do not know, what is Ethereum?
So Ethereum is we'll say, okay, so Bitcoin is the invention that was posted as open source code, and it was created out of a better, because the world needed a better form of money. Now, because it was posted as open source code, open source means that it was posted in a public place for anybody to be able to read it, copy paste it, audit it. And some of the best technologies in the world are open source. So what happened was software developers from all over the world, they took this open source code, they said, wow, this is incredible. And they copy pasted it, subtracted some things and added some things depending on the use case. Now, the first thing that Ethereum did was it added this feature for smart contracts. So Bitcoin is its own blockchain, it's its own record of transactions. And Ethereum is also its own blockchain, its own record of transactions. But what Ethereum has that Bitcoin doesn't have is this programmability feature. It has smart contracts on top of it. So the easiest way I can describe a smart contract is, a contract just like a regular one that you would have a lawyer put together, except instead of it being enforced by legal papers, it's enforced by computer code. So, everybody always uses this example. Fidelity used it as well, but a vending machine, you put in a certain amount of dollars, you press the button, and it automatically gives you what you're supposed to receive without any human intermediaries. So it's an if-then statement. If this happens, then this must happen. You think about, micro payments, right? Let's say we've talked about this before. You go to Escape Artist Insiders and you want to read an article. People can pay, cents automatically just for viewing that page. So there's just so many different functionalities of Ethereum because of smart contracts. Now, when we look at a lot of tokens on the blockchain are built on top of Ethereum because it is so programmable. I'm going to say at least let's say 60% of the tokens that are listed on CoinMarketCap, which I showed you guys last week, at least 60% of those are actually built on top of the Ethereum blockchain. So yeah, I mean, it's just Ethereum is not sound money like Bitcoin is. It doesn't really solve a monetary need. It's more kind of like the App Store. It allows you to build apps, but they're decentralized apps, which is more interesting than just an app on an app store.
Ethereum has something called gas fees that I've heard. So what are gas fees? What can people expect with that?
Yeah, so Ethereum has the software code is Turing complete, which Bitcoin is not Turing complete. Now, Turing complete essentially means that it just means that the computer code will continuously run the algorithm, the math problem until it's solved, until it finds a solution. Now, Ethereum implemented gas fees, which are, they're not a separate token, they're just kind of the fees to do transactions to incentivize people to take this system, which if you don't have developers write the code that they're writing in an efficient way, that Turing complete will just continually use up network resources. I mean, it's like gas in a car. You need it in order to get to your destination. But they did put them in there to just incentivize developers to code things smartly.
To finish off the discussion, if somebody is debating if they should buy Bitcoin or they should buy Ethereum, how do they make that decision?
I'm a huge fan of diversification. I think that if you like digital assets, if you understand them, then it doesn't hurt to have both. But if your goal is sound money and you really like gold and you like Bitcoin for the gold use case, then Ethereum's not really like that. If you like Bitcoin because it's unconfiscatable, then Ethereum is also like that. It's on a blockchain that you can hold it, that nobody can touch it, nobody can take it from you. Now, Ethereum really is, it's more like investing in, it's kind of like investing into the internet, investing into the stock market, investing into individual companies. So Ethereum really is a protocol layer to build apps, and Bitcoin is sound money, digital gold. So I would say, both is always a good option, especially if you believe that blockchain is the future. There are things that Ethereum does that I would never in a million years even want Bitcoin to do. And that's because I think Bitcoin has a really good use case. And I don't know if any other cryptocurrency is going to be able to, even the coins that are built on top of Ethereum, I don't think any of them are going to be able to rival what Bitcoin has. It's not as decentralized as Bitcoin. Bitcoin's very decentralized. So yeah, I mean, if you believe blockchain is the future, I think that it's important to diversify into both.